What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 29th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I not only want to have a candid one-on-one conversation with you guys, talking about what I believe is the biggest issue in 2024 for Bitcoin and crypto that you need to know about, but beyond that as well, we've got to talk about the actual reality, the numbers that really matter when it comes to trying to figure out whether or not Bitcoin and crypto can really continue rising like it did in 2023. I gotta tell you guys, the numbers don't look too good. We got a lot to unpack here in today's video, so if you happen to enjoy it, consider dropping a like. Let's go ahead and kick things off. So I want to start here by talking a little bit about Bitcoin. We have seen a recent rebound here coming up into the 21-day moving average. As we discussed here, the 100-day can very well be a near-term range of support, and there's going to be a tango or battle here between the bulls trying to break through the 21-day or the bears trying to break us first through the 100-day. Irrespective of where things play out here over the next few days, we're going to be watching price. We need to talk a little bit about the actual numbers, guys. And no, I'm not just saying the fundamentals. I'm not just saying, where it should be at fair value. I'm talking about flows, inflows, and outflows, and which one is outpacing the other. Well, back a couple days ago, if you would have been reading most of the major headlines, whether that was crypto-related articles, mainstream media outlets, YouTube accounts focused on crypto, Twitter influencers, whatever it might be, you'd probably be hearing about the record inflows of capital into the Bitcoin spot ETFs that were recently approved. And as we've talked about here in this channel, the problem is that there's been a siloed view, a bit of an arrogant view, in my opinion, where people are only focusing in on the numbers they want to look at, which are the inflows into the new, cheaper ETF products. What people haven't been observing is essentially the massive amount of outflows that have been coming overall over the past week, since the outflows of GBTC have continued to steadily outpace the broader inflows of new ETP products. So this is a really big issue that people unfortunately have not been made aware of by most mainstream media outlets. And because of that, this is again another reason why we need to do our own analysis. We need to dive into the numbers. And for the last week or so, we've been talking on this channel about watching those inflows, waiting to see what the numbers are, and to see overall net after the ETF launch, has this been an actual positive event for crypto? Because for the last 4 days, what this chart here demonstrates is that we've actually been seeing, when you include all of the 9 approved spot Bitcoin ETFs plus GBTC, the existing exchange traded note that's been recently converted into an ETF, and is allowing for people to obviously withdraw on that spot Bitcoin. Well, essentially, we are seeing a massive amount of outflows, an actual net negative amount of Bitcoin that is stored in ETP products day by day by day. This number here under the total for all ETFs category showcases that after the first 2 days, we really moved away from seeing an increase in spot Bitcoin to actually seeing negative outflows. And so much so that even with the two solid initial days on the 11th or the 17th here, for the Bitcoin spot ETF, what we can see here is that while we had this initial inflow, we have basically only had a net increase overall since these ETP products have launched of around 17,000 Bitcoin. 17,272 Bitcoin is the official tally here. If you ignore the 116,000 BTC that have been outflowed from the existing GBTC product, which has been around for a decade and has been accessible to the overwhelming majority of investors and traders in 401ks, IRAs, Roth IRAs, etc., you're going to have a bad time. You're not going to get an accurate number. And we talk a lot about this in the upcoming newsletter for the Dash Report. We dive into some really important metrics, some of the big misconceptions, and unfortunately a lot of the weak arguments that people are making to justify why this is happening and to kind of clarify as to why this is just short term or this isn't something to worry about. Turn away from it. Don't look at it. Right? It's a great sign of coping. And for me, this is again proving in many ways that I think we can very much expect that the Bitcoin ETF, as we've discussed for a long time, may not be as optimistic as people thought. We dive a lot more into it in the article for this month's newsletter. It's going to be dropping likely on Thursday or Friday. So if you guys want, you can sign up for the dashboard down below in the description. It's our newsletter here on the channel. We got some great resources. We provide a 360 view on markets. But if you guys are interested in that, feel free to check it out. We've got also the alerts group and a whole range of other resources that you guys get, such as our mid-month webinars, Dash Report discussion group, and you get to engage with our most quality members in the community who are sharing the insights and opportunities they're finding in the market. So definitely recommend you guys check them out. But let's go ahead and talk a little bit here about the broader altcoin market, because as we talked about, there's this tango going on, as it tends to be when you have these initial pullbacks, between the 21-day, which is starting to decline and act as resistance, and the 100-day. Now, I just want to make it clear here that I think that there is an opportunity both for altcoins and for Bitcoin to see a break above that 21-day here, get a lot of people FOMOing in. This played out exactly the same way when we, for example, broke through the 21-day here in January for altcoins, both on the 3rd and here on the 8th when we set in these relative lows. Rallied up here, recouping a lot of those losses. I think, again, you have a lot of people trading in derivatives now, and market makers, exchanges, large whales, and smart money. They love to knock people out on both sides of the trade who are over leveraged. We have to understand that dynamic. So you get these big swings, but usually a lot of those swings, those losses are usually made up in a relatively short period of time. But the major point I want to mention here is that, again, I think there's a chance we come up here into this red band here on the Lux Algo indicator on both Bitcoin around 44K, and for Total 3 right around $500 billion in market cap. And that's where I probably expect things to start rolling back down. And if we continue to see this pressure of the negative outflows of the total net move of Bitcoin and spot Bitcoin ETFs, then this is going to be your telltale sign to really run for the hills and wait for, at a minimum, prices to come down here, or valuations in the case of altcoins to come down to the 200-day. We've been talking about this big time, guys. And this leads me to talking a little bit about the big issue here for 2024, because we have to see how the inflows or outflows are going to play when it comes to the Bitcoin ETFs. I don't want to sit here with a crystal ball and say that I know magically that there's just going to continue to be negative outflows, or there's going to be a big surge of positive inflows, as so many people are claiming. However, what I do want to spend some time to talk about is the danger that comes with betting on one particular narrative as to why a cryptocurrency like Bitcoin or the broader crypto market as a whole needs to go up. And essentially, the narrative is that the institutions are going to buy our bags. The new inflows from institutional liquidity is going to come in and drive up cryptocurrency valuations because it's been kept at the floodgate for so long. Now it's just ready to go in, and there's just an unlimited cash pile, and it's going to drive Bitcoin to 6 figures, and everything's just going to go out the wazoo like it was in 2021. That is a dangerous and oversimplified narrative. And a great example of this in practice is what we saw here going into the ETF launch. A lot of people started buying Ethereum around $2,200 up to around $2,700 because of the hopes that, hey, some of the ETF applications that have been made for ETH are going to just be guaranteed to be approved. And what do you know, after we got the clear rejection, basically Ethereum dropped from 2,700 down here to 2,200, right back where it was here in December. Now, I'm not saying this is the end of the world here, but this is a clear manifestation within price that this is the only thing that's got people juiced up. People didn't buy Ethereum because ETH is more deflationary now, or there's more exciting use cases and applications and adoption of the Ethereum network, and DeFi somehow came up with some magical new application that is going to re-spark the narrative, or maybe there's entirely new narrative. No, it's none of those things. It's the hope that there is some cash pile from institutions that want to buy these things. And it's going to be enough inflows to outweigh the continued increasing market sell-side pressure as prices have increased throughout 2023. And if they continue to increase, will likely continue from the sell side as well. We need a large amount of inflows. We need more contraction of the supply to justify these valuations because the fundamentals don't speak to it, guys. And there's an important thing to say here, guys, which is that, we have our trades here, for example, in the altcoin market. We've got stacks here, for example, around 128. We are considering that maybe we would add to our positions. Render, another play we talked about in our top 3 altcoin video the other day, holding above that 21-day, definitely looking good here. There may be an opportunity for altcoins to rally here. There may be an opportunity for Bitcoin to move higher long term. But if this is the sole narrative that people are going off of, you've got to be very, very cautious here when building positions in the market, especially when you're seeing the numbers like we're seeing here for this ETF product. And the same situation of GBTC outflows could play for the Grayscale Ethereum product as well. An ETF event may not be as bullish as people previously thought. And beyond that, as I'm getting to my point here, I'm rambling a bit, What is the new narrative beyond the ETF? Because if those inflows don't show up, and I understand some people argue it takes time, the gold ETF wasn't a huge success out the gate, it took time for it to manifest. If that doesn't though, what's the new narrative? The halving event? Halving event's going to be a benefit for Bitcoin's price, no doubt about that, but it's only going to impact the supply demand inflows by around a few $1 billion. And I know that sounds like a lot of money, but in the grand scheme of things, it's a fraction of Bitcoin's market cap, 0.7%. It's not as big of a deal as it used to be. And we can't bet on the halving event being this narrative that's going to drive Bitcoin to 6 figures in combination with the ETF. Now when the ETF is seeing a net outflow for the last 4 days rather than new inflows. It's not a good look, guys. Like, we have to be honest about this. While I'll sit here and say I'm blown away and excited and happy that the Bitcoin ETFs are launched, that lower cost products have hit the market, that everyone has a right from their brokerage account, even though some people might say it's not the preferred way to do it, that you have a right to buy Bitcoin through an ETF. Absolutely. I'm all for it. I love Bitcoin. I'm not here to have some vendetta against the space or anything. I've covered it for the last coming up on 7 years here. It's insane. But I love crypto in many ways. But we can't ignore that this is an abysmal first 2 weeks. So again, just keep that in mind here. If we don't get that change in the inflows, we've got to find another narrative. We've got to get some new use case. We've got to get something that's going to get people really juiced up about the markets. Because if ETH's price is telling us anything, wow, that's not a good looking chart. And it also speaks here about the fact the markets might realize that an ETF may not be as bullish as people previously thought. That there may not be some huge wave of institutional liquidity that many people are expecting. However, one thing is certain, guys, no matter if you are up or down for the year in 2023, no matter if you caught the wave or, for example, maybe recouped on some longer term losses, and no matter where your positioning is in the market, if you are in and out of positions, if you are locking in gains, locking in losses, earning income passively in the crypto space, one of the biggest things you need to get right is make sure that you're ready for tax season in 2024. That's why we've recently partnered with CoinLedger. They're our official tax partner here for the year 2024. And CoinLedger has built not only one of the best platforms when it comes to preparing taxes. I know a topic that does not generally excite everyone, but is one that is incredibly important to get right and to make sure that you report as accurately as possible. And outside of that as well, tax reporting can be great if you happen to have had losses, if you got caught leverage trading or doing something that really knocked you out of your position and faced significant losses. Maybe you get stop hunted, whatever it might be. If you make gains or losses, it's not only important to report them, but if you report losses, essentially from there, you'll be able to, in the US at least, write off those losses. So there's a lot of important reasons to go out there and file your taxes properly. But beyond all of that, CoinLedger comes with a really great suite. They essentially allow you to streamline your tax accounting process by essentially plugging in all of your wallets, all of your exchanges, and essentially getting a 360-degree view of where you stand for the tax season each and every year. If you made gains or losses, if you made any type of taxable income, and essentially generate your forms for the IRS easily with a couple of clicks without having to go transaction by transaction and being able to generate a beautiful report for your tax accountant or something that you can plug into TurboTax or other applicable software. I'm going to go ahead and leave a link down below in the description where you guys can get 10% off. And outside of that as well, I definitely recommend you guys check out our recent review we did of CoinLedger and our complete tax guide for 2024. I'm also going to leave that link down below in the description. You guys are welcome to check that out. But again, use the link down below as well. We'll also have it in the other video to get 10% off on any of the plans within CoinLedger. Definitely recommend you guys give it a try. It's free to test out the platform until you want to actually generate the tax forms. So go ahead, give it a spin. And I think overall CoinLedger is a great platform at a minimum to track that activity that you're engaging in the crypto space. But I want to go ahead here and close in on a final topic, guys. On this discussion point of kind of keeping our expectations moderate here. we're not seeing some massive surge of capital into the crypto space. If you want to simply just take a look at the inflows in the new ETF and ignore the likely rotation out of a lot of GBTC shares into the cheaper products that have a much lower maintenance fee, that's fine. But if you, at the end of the day, want to continue ignoring that, don't be so surprised if when we hit a recession sometime in 2024 or in 2025, that Bitcoin and other assets don't do too well, because we're not seeing that major cushion coming from institutional flows that many people were expecting from an ETF. And retail liquidity is relatively dry right now. If you look at savings across the board, post-pandemic savings that have been kind of helping to keep things afloat, the amount of credit that people have had to take out here to survive in this economy, and you look at the most important metric of all, which is the yield curve on inversion here from around -1% to -0.2%. The highest level here we've seen in line with what we saw back in October and back in August of 2022. This is not a good sign to see, guys. And I would say you can utilize the Lux Algo monthly indicator here. When we get the breach of this red resistance band here, as we've seen time and time again throughout history, once it starts to invert to this degree, that is going to be your telltale sign to start running for the hills and be in cash and to wait for lower prices. I know a lot of people don't believe that perhaps the yield curve has any relevancy to crypto, that maybe it only has to do with equity markets. But when you see crypto assets walking in lockstep with other risk-on assets like stocks, like property, everything, even bonds as well, right? Any kind of asset price appreciation doesn't have to be high risk or low risk. What we generally find is that crypto assets move in alignment with the general appreciation of other assets that move when there's an expectation of money debasement. But in this environment, as monetary policy is contracting, this economic activity is starting to cool down, and we are seeing a normalization in bond markets. We are getting to the point here where we need to be prepared for a significant drawdown in crypto asset valuations. And I say that as someone who built a position here in crypto assets. While I'm definitely up on my position, there's a chance in the next couple of days, weeks or so, that there could be some nice blowout top in altcoins and I could walk away with some sizable profits on that position. When it comes to the long term, and I'm really talking about next couple of months, we need to be prepared and not be so shocked if there is some significant decline in crypto markets and if there is not some significant inflow into these new ETFs. It shouldn't come as a surprise, guys. We are not in the macro environment for a crypto ETF to do phenomenally well. And we talked about this for months, that essentially net overall, you won't be seeing that much inflows. And 17,000 Bitcoin, around, I think if I'm not mistaken, my math, around $750 million, somewhere in that ballpark, depending on current market prices. If that's all we've gotten in the first 2 weeks, that is, again, a terrible, terrible number. It's not exciting. That's less than what MicroStrategy has done in a general Class A stock offering for 3 private, institutional hedge funds or institutional entities. They did this like 2 or 3 times back over the last year or so. So if all of the institutional liquidity we can get in 2 weeks, not to mention that number is declining, by the way, is 17,000 Bitcoin, we're in for a lot of trouble. Unless something gives here, unless something changes, unless there's some new narrative. And that's just the reality, guys. Markets are inflows and outflows. We can sit here and argue one way or the other. That's the name of the game. If I saw this number continue to accelerate by thousands of Bitcoin every day, I would be tooting a very different horn. And I would be probably signaling that, hey, I want to build more altcoin positions. I want to build some Bitcoin as well in my portfolio. But that's just not the case right now. What else is going to get people juiced up about this? Because, people say the halving event. The halving event is going to reduce the issuance of new Bitcoin by about 450 Bitcoin a day. I think 450 Bitcoin is going to make a dent when we're seeing 4,610 or 2,632 or 1,434 Bitcoin being removed from ETP products every day. I hate to sound a little bit snarky about it. I'm sorry if that come across that way, guys, but I'm going to give it to you straight. I'm not here to tell you guys what you want to hear. I'm not here to tell you the bull thesis for Bitcoin to go to $1 million, or also the thesis for Bitcoin to go to $0. I'm not here to say that Bitcoin's going to crash into infinity, that it's never going to come back. What I'm saying here is that Bitcoin is probably overbought, and a lot of people bought in that anticipation throughout 2023, and we are trading at much higher prices, and therefore we need to be rightfully skeptical about whether or not Bitcoin can continue expanding higher. I think that's a very fair argument to make. That at a minimum, institutions may not be buying into the Bitcoin ETF until we get a proper correction to the 200-day moving average or lower entry points. And who knows, maybe from there, maybe we continue. Maybe Bitcoin can be that kind of hedging asset during a recession. We'll see. But at least this isn't the range where I'd be taking a lot of long-term risk. So anyways, guys, that's it for today's video. Thank you all so much for watching. If you happen to enjoy this video, consider dropping a like. It's a great way to support the channel and all that we do. And if you guys are, again, interested in preparing for tax season, check out CoinLedger down below in the description. Get 10% off. And you can also check out the Dash report as well, as we'll have our article coming out along with the rest of the newsletter sometime here towards the end of the month to the 1st of February. Take care, everyone. Hope you guys have a wonderful rest of your day. And I'll see you guys on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone.